Hi guys, Boris Dorfman here with LBC Capital. I'm going to give you a 2022 economic forecast. It's a little bit late, but better late than never, right? First, I want to pat myself on the back with my prognosis for, let's go over 2021 and 2020. And I also named every year how I would name it economically, right? Like what was the biggest impact, okay? 2020 was Corona. It was a Corona year. 2021, inflation. Okay. Towards the end of the year, we really realized that the inflation is not a joke. And 2022, I'm going to call it year of the Fed and the interest rates. These are the biggest determining factors of where economy is going and how it's behaving. Right. 2020 was Corona. It's 2022, right? Yeah. So in 2020, in March, when all this happened and people called for total collapse of real estate prices and real estate market, all this mass paranoia, like on first day I came out, I did a video. I'm going to put a link in my comments that, this is the overreaction. Interest rates. I think interest rates will stay low for next year and beyond. I don't see a reason for interest rate rising other than inflation. A lot of talk about inflation with the more money the government prints. The recent one, $2,000 per person. 2021. Let's scale back to let's go back to 2021 and see what my predictions were. Okay, I predicted the rates to stay low for the year, and I pretty much nailed it. The rates towards the end, last week of December, they creeped up a little bit. But for the most part, they stayed extremely low. So I'll give myself a check mark on that, pat on the back. I was talking about inflation. I was calling it transitory in my 2021 forecast, which I did in December of 2020. That was my fuck up. I really thought that inflation is transitory, but inflation is a real thing. So I can't take credit for that. Like I really screwed that one up. Yeah, I didn't take into effect the supply chain constraints and overprinting of the money. And I called for no interest rate hikes by the Fed. I'll give myself a check mark on that. And I called for real estate prices to go up, and they went up significantly. I'll give myself a little check on that because prices did go up. I could not forecast at this amazing appreciation of real estate prices. I thought they'll be like 5-6%, not 20%. Okay, all in all, that was 21, right? 22, where are we going? Real estate economy, stock market, rent prices. I did a video a few months ago, and I called for the stock market to fall in 2022. I said that the end of 2022, the stock market will be lower than it is in 2021. I hear about a lot of talk of crash coming or not. Everybody's calling me. It's like, what do you think about the market? And things are changing daily. Where are we today? It's so unprecedented. It's hard. Everybody has an opinion, and everybody's trying to be cautious. It's a little bit more difficult to forecast this, as we don't know what Fed is going to do, right? The year of the Fed. And I'm not a professional in stock market, but I'm staying by my prediction. 2022, at the end of the year, S&P 500 is going to be lower than at the beginning. Real estate prices, I predict mid to high single-digit rise. 2022, we'll see real estate up. We'll see more inventory. In 2022 as the interest rates are rising. In the past few weeks, during the second week of January of 2021, interest rates have gone up significantly. This is the Fed's rhetoric, and the bond market is pricing in future interest rate hikes. I feel that we have at least 3 or 4 hikes priced into the bond market. So rates have gone up significantly over the past few weeks. I don't see the rates being higher than they are today by the end of the year, okay? Bond market 10-year is at 1.8% today. My prediction is it will be lower by the end of the year. I always preach buy on a rumor, sell on the news. We expect Fed to hike interest rates this year. It's all priced in. The minute they're going to start moving it, the bond market will adjust. Mid to long run, I see lower interest rates, but in the near term, this trend will continue. But by the end of the year, we're going to see lower mortgage interest rates than they are today, okay? Oh, also in 2021, I called for most of the country to be vaccinated, which would play effect on the economy, and I think I did pretty well. It's not 90%, but it's you know, it's up there. So 21, we as a country, we did well on vaccinations.
So yes, guys, this is a lot different than 2008 in my opinion. And with everybody looking to buy properties, and with the younger generation entering the market, and baby boomers getting more savings, this looks a lot different to me, and I see it continuing for the next couple of years at least. I don't think we're going to get detracted by elections or COVID or anything else in the near future. We are strong. I'm very bullish on the economy, and real estate is still one of the best places to put your money in.
So stock market down, interest rates down by the end of the year, real estate prices up, rents are going to continue going up across the country. California also, keep in mind, California is constrained by the stupid laws that local and state legislature does as far as the rentals and non-payment, blah, blah, blah. But still, rates are going to go up, and we will see more inventory, okay? I will do a separate segment on mortgage interest rates, but this is your 2022 forecast, and big thing is going to happen, you know, by Feds and political decisions. Don't forget, we have midterm elections in November, and I still think Fed will be a little bit more careful than they should. And let's face it, over the past 2 years, they overdid it on printing of the money and stimulus, and they are late to the party. They should have started moving a little bit earlier, but Fed is always late. They're always afraid of politics, and it is what it is. Thank you, guys. Subscribe down below, and I'll see you next week.